So we studied about income from five heads, and the last one we studied about other sources. Now we will start with assessments. So in assessments, the first topic comes as permanent account number. And as you all must be aware that every person, whether it is an individual, a company, a partnership firm, or anyone whosoever is assessable under income tax, has to apply for permanent account number. So permanent account number, also known as PAN, is mandatory to obtain if your income is more than 2,50,000. That is the basic exemption limit. So if you are assessable under Income Tax Act, that is your income is more than 2,50,000, in that case you need to obtain PAN compulsorily. If your turnover is more than 5 lakh, you need to obtain PAN, that is compulsory. Voluntary application of PAN is also allowed. That means if your income is not 2,50,000, you are not at all earning, you are just a student, even you are just a one-day child, you born yesterday, then also you can apply for a PAN card. So voluntary application of PAN card is allowed. Also, assessing officer, the income tax officer, can suo moto allot PAN to anyone. What is suo moto? Suo moto means by his own wish. If he think that you are earning more than 2,50,000, whether you are earning or not, that doesn't matter. If he think, he knows, he wants that you should be allotted a PAN card, he can allot you PAN card even without your permission. Return of income. The second topic is, in the assessment part comes is return of income, also known as income tax return, ITR. So you must have heard this word many a times, that there is a return called ITR, income tax return, return of income. So what is that return of income? Who is required to file return? So any person whose income is more than 2,50,000, they must file return of income that year, not every year. Whatever year the income is more than 2,50,000, they need to file return of income. Now, advance income tax and TDS, just like any normal transaction. For example, you went to market and you asked them to do some work for you. You go to any shopkeeper, you ask them to do renovation work of your house, which would take around 1 year. Now what that person would say, please give me some advance. And not just once, he will come and ask you for advance every 1 or 2 months whenever the work is done. So accordingly, it's not that you asked a person to do a renovation of your house and you did not pay him for the whole year. Once the renovation is completed, then only you paid him amount. That's not a fair. Now, for any simple service that you take, you need to pay as per the work. You cannot simply say that I will pay you after the work is complete. So the same goes with income tax also. You earn for full year. You are earning throughout from April till March, and you want that income tax should be collected after the year end? No, you need to pay it in advance. You cannot keep the money with you. So how it will be paid? Advance income tax is payable only if net tax payable is more than 10,000. It should be paid by own. No one going to issue a notice for reminder that please pay the income, the advance tax. You need to pay it your own in 4 installments in the whole year. So you need to pay your income tax in 4 installments throughout the year. So it should be paid, the advance tax should be paid by own motion in 4 installments during the whole year. Now, what are the due dates for advance tax? What are the 4 installments due date? Just like a bank's EMI, it has a due date. So first installment should be paid before 15th June. The second installment to be paid before 15th September. Third installment to be paid before 15th December. And the fourth installment to be paid before 15th March. So that is the case about advance tax. How much is it need to be paid? It's not a pro rata. It's not that every time you need to pay 25%. First installment you need to pay 15% of your total tax. The second installment you need to pay 45% of your total tax. The third installment you need to pay 75% of your total tax. Until the fourth installment, you need to pay full 100% of advance tax. Now, you might have a question in your mind, how will you know that how much will your tax? Because you must not be aware that how much you will earn for this year, because this is an advance tax. You can't say that I will earn 10 lakh for this year or 20 lakh or 30 lakh. It might be a bit estimation, but not the exact one. So what should be done? It's okay. Government is giving you enough opportunity. They are not saying that you pay 25% of advance tax every time. First time you need to pay 15%. Now you must pay 25% only, but even if it is 15%, it's okay. In the second one, you must pay 50%, but even if it is 45%, it's okay. So they want 45% only, though you should think like 50% so that you will arrive at 45%. In the third installment, that is by December, you should be aware that how much you will be earning this year. So like we are sitting on 2nd, 3rd January today. Now everyone should be aware how much you are earning for this year. And that's why government is saying that since you are aware already how much you would be earning, that's why you should pay the whole amount. So 75% of advance tax should be paid before 15 December and the 100% of advance tax should be paid before 15th March. So that is the case about advance tax. Now there is an exemption for assessee which is eligible under section 44AD. We talked about presumptive taxation. where we need to declare income on presumptive basis under section 44 AD. So in these cases, who are declaring their income under section 44 AD, they need to pay advance tax before 15th March only. They can skip the first, second, and third installment. Now, if there is a shortfall of advance tax, if you did not pay 15% by 15th June, or 45% by 15th September, or 75% by 15th December, or 100% by 15th March, then you need to pay interest at the rate 1% per month or part thereof. Now, what does it mean by part thereof? Suppose you paid advance tax of third installment on 16th December. You are 1 day late. Suppose you forget to pay advance tax on 15 December, but you paid this on 16 December, you need to pay full 1% tax because it's for 1 month or part thereof. So part means even 1 day is equal to 1 month. It's not that if you are late by 1 day, you need to pay interest for 1 day. No, you need to pay interest for 1 month, even if you are late by 1 day. So that means part thereof. But up to 31st March. The interest is applicable only up to 31st March under section 234C. Now there is one more section. If 90% of advance tax is not paid up to 31st March, then interest at the rate 1% per month or part thereof from 1st April till the actual payment will again start. So that means whatever be the case, you must pay advance tax on these dates. If you don't pay, then difference whenever you pay, because ultimately when you file your income tax return, you have to pay full tax. It's not that you will save your tax, it's that it has to be paid in advance. So if you don't pay on 15 June, 15 September, 15 December or 15th March, then whatever difference is remaining, you may be paying in July, August, September, whenever you file your return. Then you have to pay interest from the due date till the actual date. So firstly, the interest will be calculated under section 234C. That is up to 31st March. And from 1st April, a different section starts, rate will be the same. Everything is same, it's just a change of section. So you have to pay interest for the whole time. The only condition, if you paid 90% of tax by 31st March, then 234B will not apply. Self-assessment. The next topic is self-assessment. I just said one thing. Ultimately, you have to pay the whole tax while filing your income tax return. How? Every assessee, every person need to assess, need to calculate his own income tax every year and file an income tax return. That means the detail of his income and the tax. So every person need to calculate his own income tax. No one is going to check, no one is going to calculate income tax for you. You yourself need to calculate your income tax and file it. So it's self-assessment. You are assessing yourself. You need to assess total income, tax on total income. You need to deduct your advance tax because maybe you have earned 10 lakh rupees. Your income tax would be like 2 lakh rupees. Now you have paid advance tax till 31st March, that is 1,90,000. Maybe someone has deducted your TDS, that is 5,000. So total 1,95,000 is deducted. Now maybe since you have not paid 95% of advance tax before 31st March, there might be some interest of 2,000. Net tax payable is this plus this minus this minus this. Whatever net tax payable is, for example, 3,000 is the net tax payable you need to pay as self-assessment tax. When do you need to pay? before filing income tax return. And then you can file the income tax return showing all these things. Whatever you have calculated your own, whatever you have assessed your own income tax, you have to file it as in a form which is prescribed under income tax. Assessment. So there was a self-assessment which you assessed yourself. Then there is an assessment. The above income tax return. So this income tax return you have filed. Now this will be checked for arithmetical accuracy of all our calculations. Whether you have calculated tax correctly, whether you have deducted all these tax correctly, whether the interest is correct, total income is correct, tax payable is correct, everything is correct. Accordingly, you will be issued an assessment order. And if there is any error, maybe you have calculated your tax incorrectly, then demand will be raised with interest. You need to pay the demand whatever is calculated from the assessment order. Best judgment assessment. If anyone don't file income tax return, don't even reply to notice issued by department, then, now this is very important. If anyone don't file income tax return, don't even reply to notice issued by income tax department, department may assess, department may calculate your income by their own. If they think your income is 1 crore, they will calculate it as 1 crore because you are not replying, you are not filing return, you are not replying to their notices. What will they do? They will assume your income, but not just assume. As per the material available on records, they must be having some information, some documents, some details of you. From them, from these documents, they will calculate your income by their own. They won't ask you because you are not replying, and they will ask you to pay the tax accordingly. So that is known as best judgment assessment. Income escaping assessment. If anyone don't show full income particulars in income tax return, suppose you are earning 5 lakh rupees, but you are showing 3 lakh only in income tax return. Department may reassess the income which is escaped from assessment by issuing a notice. Then income tax will issue a notice to you. Hey, your income is 5 lakh, you're showing just 3 lakh. Just give the tax of 2 lakh. And not just tax, because now it's an escaping assessment. You have tried to escape from income tax, then you have to pay interest, penalty, and all other consequences which might happen. Yes, procedure will be followed for this under section 147 to 143. So that is known as income escaping assessment. So don't even dare to disguise anything from income tax. They have all the powers. Next topic is rectification of mistakes and amendment to assessment order. Now suppose you have been issued an order by any way, maybe self-assessment, your assessment, normal assessment, best judgment assessment, income escape assessment, any assessment, and there is an error. There is an error in the assessment order. Then that mistake is apparent from record. It should be visible from the records itself. It's not that you need to go into the deep. No, it should be apparent from record. For example, 5 plus 5 is equal to 10. But what is written in order? 5 plus 5 is equals to 11. So that's a mistake apparent from record. It should be visible just looking at the records. That mistake, it is pointed out by assessing officer at his own. It might happen that the officer who have issued the order, he points that mistake. Oh, I did some mistake. 5 plus 5 should be 10. But I calculated at 11. He can rectify it at his own. If it is pointed by assessee, you are an assessee, you have been served that much order, 5 plus 5 is equals to 11, you can ask assessing officer to correct it. by making an application. If in any case, if it is pointed out by assessing officer, then assessee must be informed. It's not that, oh, let it be, we will do it. No, you must inform. That assessing officer should inform the assessee that please come, there is an error in the order, I'm correcting it. Please get it note from me. And at least when something is done against the assessee, suppose it's about making 5 plus 5 11, it is there, and an assessing officer wants to make it 10. He may not ask assessee to come because he's anyway benefiting the assessee, so assessee would not be required. But if it is 5 plus 5 is equal to 9, now assessing officer thinks, oh, it is 9, no, it should be 10. Now this is something which is done against the assessee. 9 is becoming 10 now, tax liability is increasing for the assessee. Then you have to inform assessee for that. You have to ask him whether you have any objection for that or not. If he has no objection, then only it should be corrected. Compliance with assessment order or contesting. So whatever be the case, you have received an order from any income tax authority, then you have two options. Either you can accept the order and pay the demand whatever they are asking. You can pay whatever tax they are asking, or you may appeal to Commissioner of Income Tax Appeals. So there is an appellate authority, Commissioner of Income Tax Appeals. You can file an appeal to that I have a problem with this order. Please correct me. Please help me with this. If the commissioner does not listen to you, you can even go to the above level, which is ITAT, Income Tax Appellate Tribunal. If even tribunal does not listen to you, you can go to High Court directly. It's High Court of your state. If even High Court does not listen to you, you can go to Supreme Court. And if Supreme Court doesn't listen to you, God forbid, nothing can happen. So that's all for today. Tomorrow we will study about provisions relating to different type of assessees and income and other matters. If there are any questions, please let me know on the chat box.